What's up, everyone, and welcome to the Long Game Podcast hosted by Thomas Kopelman and Jacob Turner. In each episode, you'll hear us break down financial topics that are relevant to you and your situation. Our goal is to help bring credible financial information to you in short, bite-sized episodes.
All opinions expressed on this show are for educational, informational, and entertainment purposes only. Nothing on the Long Game Podcast should be considered advice. Always consult with your team of professionals before making any decisions regarding your finances.
Welcome back, everyone, to the final episode of the insurance series. If you're a true finance person, you've made it through it all, or you're a financial advisor trying to learn more. But either way, we really appreciate it. Today we're joined, if you listen to the last one, we got Broc Buckles back. He's one of the rare people in insurances that isn't some weirdo. So we like to have him on, come talk, because he actually can talk.
I think the term used on the last episode was slinging insurance. So let's just rephrase that. Brock's one of the true professionals, not slinging insurance.
He's not a weirdo.
I'm not a weirdo. I would like to think I'm not a weirdo either, but I'm not slinging or a weirdo.
Broc is a true expert in the space.
Yeah, he is. And so today we're going to talk about disability insurance, which sounds like from what we were talking about before this, that we all have slightly different viewpoints on. I think we all can attest to the importance of it for the right people. But Broc, break it down for us. What is disability insurance?
Yeah, so disability insurance is basically a type of insurance that acts to replace income. So I always tell people, if you want to try to remember how to think about disability income insurance, just replace it to income replacement insurance, and that's a lot more straightforward way to understand it. But essentially, and there's different ways to kind of get it, or elimination periods and stuff, which we'll get into. But what it does is, if something were to happen to you, you're not able to work, typically 15 to 20% of the time, or you lose 15 to 20% of your income, it acts to supplement the money that you would have made. So there's two types. The disability income insurance that you have through work, which is called group LTD. And then there's LTD, or long-term disability insurance, that you can buy on the private market that typically acts to supplement it, what you have through work. And if you don't have any through work, you can have it all through, private. Yeah. Insurance company.
There is short-term disability. That's not going to be our focus here today. Short-term is like anywhere from like 1 week to a month to 3 months. In all reality, I don't think anybody should be paying for short-term disability other than what's through work, right? Sure, pay for it. If you pay for it versus the employer pays it, then it's not taxable. But in all reality, like, you shouldn't need income. You shouldn't need something to replace income 1 to 3 months. That is a perfect X in that your financial planning is terrible right now if you can't make it 1 to 3 months without your income. But, disability insurance is kind of interesting, because I think when you ask most people about insurance to protect their income, they think that's life insurance, right? Well, if I'm not here, then life insurance will help make sure my family has income. But there's this whole other side of the world where you can't work, you have a disability, and you don't have an income, and you need to protect against that. And I think base level of that is a good emergency fund. And, we don't have to spend that much time today. And then short-term disability. But then after that, it's thinking about what happens from 3 months all the way beyond that. And so let's start with group disability. What do you most often see in group disability policies, Broc?
Yeah, so typically what we see is 50 to 60% income replacement is about average. An important distinction, an important thing to know about that is, if it's employer paid, that benefit is going to be taxable coming to you. So if it says 60%, just know that that's going to be taxable coming to you. But that's typically what we see through work.
And look if you can pay for it, because I would say less than half the time you can. But if you can, it's not going to be this big cost, right? It might be $10, $20, $30 a month or something. But the difference between, hey, you take home $15K or you take home $15K post taxes is a really, really big difference. I think the other thing to think about with group plans is max benefit, right? So you might see that it says covers 60%, but if you're, a lot of us work with very high income earners, you might make $1 million a year through RSUs, blah, blah, blah. Your disability policy might say 60% up to 10K, 60% up to 15K. And so what you thought was 60% might be like 10 to 20% of truly what you make.
Yeah, I was getting ready to say that. Thank you for covering that. That's an important distinction, is the definitions and the limit inside the policy. The other thing, and we'll get into definitions, but a lot of them aren't own occupation definitions. And if they are own occupation, meaning covering the specific job that you do, sometimes what you'll see is after 2 years of disability, they'll change to any occupation, meaning maybe you can't do what you do, but you could go work some other job. Then they could reduce or eliminate the benefit. So it's important not only to know, is it 60%? Is it 50%? Also, what's that limit? And also, what is the definition of that disability? Because that could very literally be the difference between, you getting a substantial benefit for the amount of time that you need it, or it cutting off at some point.
Yeah. Yeah. And I feel like most common, you're going to see group disability go to 67 or 65 or whatever. I think, generally group's pretty simple, right? What's the percentage? Can you pay for it yourself? What's that max? And then, own occupation. I think pretty simple. I think we can move to individual, and then we'll go back and think about like, how do you plan around this? But walk us through lay of the land for individual.
Yeah. So individual, what we're essentially trying to do the vast majority of the time is complement a group policy, right? So say that we're looking. Sorry.
Important. That's really important. What you said there is they go hand in hand, right? You're not replacing your term policy. You're combining these to get you to what you need.
Yeah, and we've even had the question. I think this is important to clarify as well, as people say, "Well, I really like the definitions or the way that the individual or private policies function better than the way my group disability policies." That doesn't matter. Okay, because you have to take into consideration, for the sake of insurance fraud and a bunch of other things, what the person has through work. So you're actually, even if you didn't take advantage of the LTD that you had through work, we're still not going to be able to replace that 60% that you would have had through work. So long story short, if you have a plan through work, always make sure that you're taking advantage of that. Another important distinction is, once you buy that group long-term disability policy, those premiums are paid with post-tax dollars, right? Meaning that benefit coming to you would be tax-free. So that's another difference, an important thing. You can make the private policies or the individual disability a lot stronger, again, covering that own occupation. So quickly going through those, there's a few different definitions. Any occupation means that if you could do anything outside of your job, the policy is not going to pay, which means you have to be completely... Exactly. You have to be completely disabled. You do not want an any occupation definition. A modified own occupation sounds like own occupation because it has the words own occupation, but that modified own occupation means that if you could go back to work, as soon as you're making 15 to 20% of what you were making pre-disability, that company then has the right to reduce or eliminate your disability benefit. So, important distinction. The only policy definition that you want is own occupation, which actually means you could be disabled, go work another job, and because that other job you're working isn't your occupation that you were in when you bought the policy, you could actually work and receive a disability benefit. So very important to have that own occupation definition. Do you want to go into riders? What do you want to talk about next with it?
I do.
Okay. So another thing that you want to look at. Yeah. Sorry. Go ahead, man.
I was just saying, just go through the main 3 to 4.
Yeah, so I would say definitely the riders that you want to make sure that you have. One is COLA, cost of living adjustment. That's going to ensure that the policy keeps up with inflation. Super important, because everybody knows that the money that you're making today in 20 years is not going to have the same buying power that it does today. So that's a really important one. Again, own occupation is very important. Another future increase option. So for people that know they're going to be making more money in the future, one of the things that you don't want to have to think about is, if my health changes, can I get more disability income insurance? And so an FIO rider is really important. You can build that into the policy for a certain amount. And then the other one, all those that I just talked about, pretty common. A lot of people that are exploring disability talk about it. But this one is very important, and an extended partial rider. Right? So this is the thing that allows it to be, even if you have a partial disability. So as soon as you're not able to work 15 to 20% of the time, the benefit's going to pay out. If you don't have that on the policy, you could be limited to a total disability, which means that you can't work at all. So if you're getting a DI policy, make sure that it has that, because one of the things we know about disability is, one, most disabilities are due to injury, or are due to illness, not injury, right? So you get sick, mental health considerations. And then the other thing that we know is most of the time disabilities are not total, they're partial. So you definitely want to have a disability policy that covers that.
Yeah. All really good points. And then the one, you talked about like, the guaranteed purchase option, like this is the perfect example for residents, different people who are like, okay, I started making an income. I'm 4 years away from making 10x the income. Well, what if I got injured during school, right? Or during residency? If you get injured during residency, that would kind of suck. You'd much rather get hurt after you increase this disability insurance and you're a couple years into your career. But like, this is kind of that space where it really makes sense. And there's tons of salespeople who are trying to get in to talk to, residents and, medical students before they get there. But that's kind of the prime example. The other example is, maybe you're a lawyer or maybe you're some other profession. And, we were talking about this ahead of time with Jacob and we were like, we really do like this for medical professionals or dentists or orthodontists. And he's like, I don't really work with those people. Totally true. The hard part is when you look statistically, the number one reason people don't work is because of anxiety and depression. Right. Yep. And like that isn't immune to jobs where you have your hands, right? If you look at, obviously doctors have very high rates of being unhappy with their job. Lawyers are very high. There's a lot of these professions where people end up being out of work for years due to, mental health things. So like, yes, it's easier to identify with like my hands, my feet, I can't walk. It's harder for people to understand that like, oh, that could be you. And it is harder to sell too. It is harder to convince people that they need it when they feel like me, where I could just sit in this chair all day and work and like my legs or my arms don't work. I'm sure I could figure it out.
Yeah. And I mean, according to the Social Security disability website, right, which is insane, but this is an actual statistic. 1 in 4 of today's 20-year-olds will be disabled at some point in their working career. That doesn't mean, they're going to be disabled forever. Average disability is about 3 years, but that is actually on a government website. So
that seems crazy, but that seems like a stat that would come from Northwestern Mutual. They have an incredible stat on disability insurance if you've ever seen their deck. Look, I think disability insurance is like, it goes back to a lot of the insurances coverages that we're talking about. It's really specific to your situation. Like the reality is I don't have disability insurance. Am I taking on more risk by not having it? Certainly. Right. But based on my specific situation, based on how I feel about it, based on being educated around the potential options, I said, hey, in the role I'm in, I'm okay not having it. Somebody else could be in the exact same role I'm in, the exact same position, but feel differently about it. And that's why it's really important. I just think for anybody listening, like just be educated around the pros and cons. Like anything we talk about, whether it's an insurance solution, whether it's an investment product, etc., there's pros and cons to everything in life. And you just need to understand like, hey, what are the pros and cons of it? And am I willing to face whatever the risks are if I don't have disability coverage? And Thomas, I think to your point, there's a lot of ways out there for people to quote unquote be disabled and not be, in a car accident like we think about, or not have, a dentist in that situation. My dad was a dentist, like he worked with his hands. He had disability insurance because like if he can't work with his hands, he can't do his job. But in my situation, like there's a lot of business owners I work with where like they are true business owners. They're overseeing the company. And the reality is like their day-to-day in the business is almost non-existent. Like they really own the business. They built great processes in place. And that's not to say that like they're not still adding value to the company. But I think if they were on a deserted island for 6 months, they built a really great business to be able to say, like, the business is going to keep running without me. In that situation, I think it's having the conversation around, okay, do we want to potentially not have it? One question I would ask both of you guys, which I think is something that comes up quite often, is if you have a client situation, they come to you and they have disability insurance, and you think, in your situation, I don't know if we either need it or we don't need really as much as we currently have. How do you guys approach that? Because one thing that we were talking about before recording is we're taking on a lot of risk if I say like, you don't need disability insurance, right? Yeah. But I think there's oftentimes when somebody comes to us, maybe they have been sold a disability policy and it's like, your situation's changed or you really don't need that policy. But there's a lot of risk in saying, let's just get rid of that policy because if something does happen, Broc, to your point, 1 in 4, now what? So I'm curious how you guys approach that.
Well, I love that you asked that because I was slightly going to go into there with explaining a couple of things first. The first thing that needs to be explained is like elimination and benefit period. So like elimination period is when you have to cross this line before disability starts to pay out, right? Common you're going to see is 3 months. If you go to somebody who's selling you insurance, you're going to see 3 months every time. Why? Because it's actually about one of the most expensive parts of the policy. The other one is how long this lasts for. And so that could be 5 year, 1 year, 5 year, 10 year, 67, et cetera. And so like, I have a client that we're going through this right now. And what I did is we took a step back and said, let's look at your life holistically, right? You have a few $1 million built up. You're not able to retire, but you have a few $1 million built up. You have over a year in cash. And so what you want out of this policy is very different, right? That 3-month elimination period, not important, right? You don't even need a year, right? And if you think about both our working spouses, their cash would actually be enough to cover like 3 years if this one was lost and about 18 months if this one's lost. So what we're doing is we're moving their disability from 3 months to a year. And that's going to cut it down significantly less. Then we're going to look at monthly expenses. They plan to go next year, buy a bigger house. Okay, if they lost that income, what would be the shortfall? We don't need to replace every dollar of their income. And then realistically, they're 5 to 10 years away from being work optional based on current investing. They don't need to 67. We can cut it down to 5 or 10 years. So now instead of it being like $6K a year, it might be like $2,000 a year. So I think you can still have the conversation to say, in your example of the people you're talking about, if you are just like an operator of some businesses where you're kind of on the board, you give a little bit of advice, they're running themselves, I probably wouldn't get it personally. I wouldn't. I think I'd be fine. If you are the operator, though, like me, I'm running my business day in, day out. If I left, the business would be drastically different. There's no way the income would stay the same. I'd have to sell right away. Maybe that would work. Maybe it wouldn't. It's different if you need disability in those two routes.
Yeah, I mean, I would say the same thing is like really you kind of put them in the driver's seat and say, hey, if we reduce this and something were to happen, this is how much you have coming in, knowing the potential risks. How do you feel about that? Right. And if the answer is like, I don't know, that would feel a little bit tight. I don't like the constraint that puts on me. Then maybe the answer is we don't reduce it, right? If they say, you know what, honestly, I feel like I'm in a pretty good place. I was in a place where I didn't have as much money when we originally purchased this thing, then that's a completely different story. And again, when you guys are talking to business owner clients and high net worth individuals, that's a different situation than if you're talking to someone that's a W-2 employee that's making a salary, trying to save diligently. Like my first DI claim ever was on, one of my good friends that I'd known for a long time. Group policy through work, unfortunately, didn't pay out. So that was the only thing he had coming in for the time. So it just, again, but that's a different consideration if you're making a ton of money or you could sell your business. So it really is a very individual kind of decision.
Yeah. But I think this all comes back to why planning leads to insurance, not insurance leads to insurance, right?
100%.
So when you go to sit down to somebody and they're like, okay, I know I want to sell you life and disability, right? How can I get you the most term and how can I get you the most disability, right? When in reality, they haven't even thought about what's going on over here. When you start with, here's where you're at, here's the risks you face, what insurances come into place to protect that, then you're starting to make things specific. And so I think at the end of the day, right, whether you have a financial planner full time, whether you do these one-time plans that like Jacob and I and other people do, right, you want to take this holistic view of your finances and then figure out what the prescription is, how your investments need to be, what vehicles you should use. You can't just start with, I would love to invest in this, right? Or, hey, I want to get every insurance right. There's just no way to figure that out until you figure out where you're at, where you're going. And I think that's probably the perfect way to wrap up, unless we have anything else to add on disability insurance.
Do you have something, Jacob?
I would just say general stats should not lead to specific advice. So general stats can be a good starting point, but general stats should not lead to specific implementation for you in your own life. Like everybody's financial life is so unique to them. And one of the things, Broc, that we talked about with you on an earlier episode was just this idea that like, if we take rules of thumb and we try to apply it across the board to people, you're going to get outcomes that you didn't intend for. So you need to make sure, whether it's with a family member, if you're a DIYer, or whether it's with a professional, if you hire somebody, you need to have conversations around understanding like what really happens if this situation happens. And if this situation happens, what am I comfortable taking on the risk myself? And what do I just want to make sure that I just insure the risk? And that's different for everybody, right? Like you could have a ton of disability insurance and I could look at it and say, you know what, if I was you, I would think about these 3 things. I don't know if I would do as much as you. And then they might be able to say, you know what, I've thought about those 3 things. I still just want to make sure that it's covered. And that's a really good financial decision for them. And it's not the same financial decision I would make. And that's okay.
Yep. That's kind of goes to the like what makes you feel good, right? Like sometimes just to have something in place just in case, people really appreciate that, even if they have the assets elsewhere that likely could make them be okay. The one other thing that I would add is if you're applying and you have past medical histories or past medical considerations, there are sometimes what's called exclusions in the policies, meaning that they would say, if it's a mental health consideration and that's why you're filing the claim, we won't pay for that. But if you do apply and you do get an exclusion, make sure that you ask for a reconsideration period, because sometimes between 1 and 3 years, you can go back and get that eliminated. So I would just say good practical knowledge to know if you're going to apply for a policy and there's something that gets excluded from it, there might be an opportunity to strengthen the policy down the road.
Yeah, really good point. And just going back to the last one about like sometimes you can do things with your finances to make you feel better is so true, right? Like I think, of all the social media warriors of the world that like you do this because this is the most efficient. It's like, part of your financial life is getting rid of some of the things that you don't want to have to worry about, whether that's hiring, cleaners or other things, but it also can be potentially being overinsured in areas so you don't have to worry about if your kids are going to be okay. Or, hey, if some reason I get in a car accident and I can't work, we're probably okay, but I'd rather have disability insurance to make sure my family can still have their lifestyle, right? Like it's okay that somebody else wouldn't want that. If that makes you feel better, that's what matters. So, yep. All right, guys. Well, Broc, appreciate you coming on. Jacob, love doing this with you as always. And everybody, thank you for listening. I think, again, insurance isn't the most fun thing, but it is really, really important. And if you're not going to work with a financial advisor, you need to be doing this yourself. If you are working with a financial advisor, make sure you're talking to them about it and starting there on all of your insurances. But till next time.